Getting back to our big corporate story of the morning, McDonald's ousting CEO Steve Easterbrook. Check out how McDonald's stock has performed during his tenure. I think the stock was up about 92%, and that's compared to the competitors. You can see Wendy's is the closest competitor, up 90%. Then you have Chipotle up by about 15% over that time period. Let's get Wall Street's reaction to today's news. Joining us is RJ Hadavi. He's senior restaurant and retail analyst at Morningstar. Also, Will Slabaugh, who is restaurant analyst at Stephens. And RJ, let's start with you. Your concerns about the new CEO, or do you have any?
No, I'm pretty comfortable with Chris Kempczinski as the new CEO. He co-authored a lot of the velocity initiatives that Steve Easterbrook put in place. He was a big proponent of the fresh beef initiative the company rolled out, and honestly, he did a lot behind the scenes with delivering digital. So I think we'll see a lot of continuation of Steve's initiatives with Chris at the helm, and I'm excited to see what we can do with the drive-through initiatives, both the technology initiatives, the dynamic yield and Apprente, the acquisitions the company's made. I think there's a real opportunity to accelerate a lot of things that the company's been in the works with.
So you think this sell-off in the shares today, down by about 1.75%, is that a buying opportunity?
I think it is, particularly if you're a long-term holder. There's still going to be a little bit of transition as they wrap up the Experience of the Future initiative in the U.S. next year and roll out some of the new initiatives. But I think as a long-term play, this is still a name worth keeping in your portfolio.
Well, what are your thoughts?
Yeah, so I think all that's fair, but also I think it's important to keep in mind that whenever Steve came in, McDonald's was somewhat stagnant around the world. And so over the past 5 years, we've seen record results internationally, the UK, France. The US had a tremendous turnaround. So investors, franchisees have made a lot of money with Steve at the helm. And he's a dynamic personality that I think he had an agenda and he got a lot of things done. So I wouldn't say we have an issue with Chris at all. And obviously the US has done well under his leadership. But I think if you're a long-term investor, today does make you take some pause, right? And reassess sort of, has the thesis changed here? I don't think that it fundamentally has, but you definitely have some more questions today than yesterday, and I expect the market to reflect that.
You think basically it's just a reflection that the low-hanging fruit has already been taken down at this point?
I think that's true to a certain degree. You look at some of the things that's happened with all-day breakfast, and they've introduced value bundles that have worked really, really well, some product innovation. I think there's definitely room for more of that to happen, and McDonald's best days are very likely ahead of it. But yeah, there were some definitely easier paths whenever Steve came in because of some I think, errors in judgment from prior management.
Hey, RJ, we looked at how the competitors have fared over the last several years since we've seen Easterbrook in charge at McDonald's. It was up 92%. It's the biggest of the gainers. But Piper this morning is saying that they would recommend people rotate out of McDonald's and into Chipotle. And you can see Chipotle over that period of time up by about 15%. What do you think?
Yeah, I'm a little bit concerned on that front. I mean, I like the Chipotle story. I like what Brian's done with the brand, and particularly, talking about picking low-hanging fruit. He's done a great job on that front, just, implementing some easy marketing changes, better utilizing that second make line. However, we start to lap that big delivery hump that the company had last year in December and January. My concern is even if we start to decelerate to mid to high single-digit comps, the market may take a closer look at this one. Love the story. I like the story longer term, but I think the valuation's got a little bit ahead of itself. So I'd prefer a name like McDonald's, which, again, if we do start to see any kind of slowdown in the economy, it generally works pretty well and still has a pretty healthy dividend yield at the same time.